Requirement A and B relates to client 1 only. A, discuss the accounting treatment. Now guys, stop right there. When you think about accounting treatment, I want you to link this to your timelines. When you look at the right side of your screen, the accounting treatment, remember this will include your initial recognition and measurement. Remember recognition in terms of your journal entries, your debits and your credits. Measurement is how do you calculate the amount, as well as, remember, year ends, your subsequent recognition and measurement. Recognition, debits, credits. Measurement, calculations. Right, now discuss the accounting treatment of the contract with Fleet Rent Limited and the statement of financial position of UberTrack Limited for the reporting period ended 31 December 2018 in terms of International Financial Reporting Standards. Guys, you need to focus. This is in the statement of financial position. Important. And they indicate to us, limit your discussion to IFRS 16 leases. Assume that UberTrack early adopted IFRS 16 and IAS 12 income taxes based on the statement of financial position approach. Now, when you see this, you need to know deferred tax, right? Please discuss each item recognized separately in terms of the tax implications. Therefore, separately each item that will be applicable at 15%. Include all the relevant calculations. Round all amounts to your nearest rand. Assume all amounts are material. Ignore current tax. Please don't waste your time with current tax. You need to focus on the deferred tax. And last bullet point, ignore comparative amounts, presentation and disclosure in your discussion. Therefore, please do not waste your time. It is worth your while to read through the requirement at least 2-3 times. Ensure that you understand what you need to do. It's worth your while to briefly think and plan. If you look at the word accounting treatment, you need to identify, except if indicated otherwise, guys, what is the initial recognition and measurement, and what is the subsequent recognition and measurement. Now, due to the fact that they have indicated the contract, if you think about IFRS 16, we will first have to identify in our timeline if this is a lease in terms of IFRS 16. Therefore, guys, they indicate to us, limit your discussion to IFRS 16 and IAS 12. Okay, so when I look at the IFRS 16 discussion only, guys, you need to please open your IFRS 16 revision page for me. You will identify on your revision page. Now, I'm not going to look at I'm not going to look at the revision page with you just now. I want to look at my timeline, but I want you to have your revision page open and view with me as I talk. Right. First, we need to determine, is this a lease in terms of IFRS 16? If yes, we know that we are busy with our lessee. In the lessee's records, in terms of our recognition, we know we need to recognize the right of use of our asset and a lease liability, except, guys, except when? Except if this is a short-term lease or a low-value asset, right? Now, we need to apply this, but if you quickly think about this, it will not be either of these two, right? Now, we need to move on to how do we calculate the right of use of the asset and the lease liability. Then move on to your subsequent recognition. It will remain the same, guys. Right of use of asset, lease liability, and most probably you can include there will be depreciation, and we will have to recognize the interest expense and our payment. Right? Happy. Measurement. What is the amount? How do we calculate these amounts? Right. Then, when you look at the second section in terms of IAS 12 discussion, guys, now I'm pretty sure when you look at those 10 marks, quite a lot of marks, because there is enough to include. Now, when you think about this section of the requirement, think about your deferred tax calculation: carrying amount, tax base, temporary difference, and deferred tax. We know that we have the right of use of our asset and we have our lease liability. Guys, then you need to discuss, how do we calculate the carrying amount of both of these two? What is the tax base of both of these two? And how do we calculate the temporary differences? And the deferred tax, is this deferred tax asset or deferred tax liability? Remember, they've indicated to us that we need to please discuss each item recognized separately. Therefore, separately the right of use of your asset and separately your lease liability. Now it's time to write out everything. Therefore, it is important that you have your actual IFRS 16 with you. Why? Because when we need to discuss if this is a lease, where in your IFRS 16 is the information? You need to open B31. And B31 will provide you with the steps that you need to follow. Right, on a new page, indicate that this is part A1, UberTrack Limited. Remember, this is a theory question. Therefore, you will have to identify your theory, apply the theory, and please remember to conclude. You will identify that I've included a legend. Now, I'm not going to write out sentences. I don't have time in our recordings to do this. Now, in terms of my legend, when I make use of UT, this will represent the word UberTrack. If I make use of FR, this will represent fleet rent, a tick mark, a right, and an A, an asset. Now, guys, I know that you might get frustrated with me because I do keep on repeating the fact that you need to spend time on a bit of planning. Now, I am going to repeat this again. Guys, if you spend a few seconds to briefly plan how you will attempt your questions, I promise you that you will score more marks than just starting off writing stuff. Because when you plan, you think about this. You think about what is the accounting treatment. Therefore, in terms of our timeline, first, we need to identify if this contract between UberTrack and Fleet Rent will be a lease in terms of IFRS 16. Now, this is application. If you have indicated that we need to identify if the contract is a lease versus we need to identify if the contract between UberTrack and Fleet Rent will be a lease. This is application because you include UberTrack, Fleet Rent, that we specifically need to look at these entities. Right, now once we have concluded that this is a lease, we need to move on to our initial recognition, which will be our debit, credit. We need to move on to our initial measurement, our calculation in terms of our accounts that we will debit or credit, and then in terms of our subsequent measurement, what will the amounts be? How do we determine the amounts that should be included? Focus on our statement of financial position. Remember, the requirement stated that we need to discuss this in terms of the statement of financial position. Right, therefore, first step, identify, is this contract a lease? Where do we start? You need to open B31 and let's briefly work through this. B31, now you can refer to your revision lecture part 1 of 3 if you can't remember exactly what everything meant. And I have provided you with this handout when we looked at IFRS 16 as well. Right, now the main thing in terms of our contract, when you look at the left side of your screen, we need to identify if there is an identified asset. And you will have to refer to B13 to B20. We need to identify if there is the right to control. Does Fleet Rent, not Fleet Rent, guys, sorry, does UberTrack have the right to control the use of this asset to receive the money, the future economic benefits from the use of that asset. And then we need to identify just what is the period, right? Therefore, first, if we look at the identified asset, now I am going to make use of pink, guys. Look at this pink color on the right side of your screen to briefly, quickly scan through this. I'm not going to work through this in detail. If you want to work through this in detail, you can refer to part 1 of 3 of IFRS 16 revision lectures. Now, first question, is there an identified asset? Now, what is an identified asset? Remember, the contract has to explicitly specify the details of the asset. Now, when you refer to this contract, it indicates to us that there is 50 vehicles, which is exactly the same, and they will be identified based on the registration numbers, right? Therefore, yes, this is explicitly specified. Substantive rights, the right to provide the supplier with a right to substitute the asset during the lease term. Guys, this is important to us because immediately we know that fleet rent does not have the right to substitute the vehicles. They've indicated this to us, guys, sorry, very skew vehicle. Does not have the right to substitute any vehicles without the request from our lessee. Okay, but I think we've jumped this one. Therefore, when we look at question 1, the identified asset, yes. Question number 2, does the customer have the right to obtain substantially all of the economic benefits? Yes, guys. UberTrack may use this asset to generate future economic benefits from the use of the asset, and UberTrack will receive the future economic benefits. Number 3, does the supplier, the customer, or neither party? We look at our customer has the right to direct how and for what purpose the asset should be used. Therefore, yes, if we look at the contract, it stipulates that the customer, UberTrack, can use these vehicles at its own discretion throughout the period. Therefore, yes, has the power. Therefore, yes, has control, the right to control the use. And based on this, when you look at your flow chart, we can conclude and indicate that yes, this is a lease in terms of IFRS 16. Right, now we need to look at the contract section and the contract between UberTrack and Fleet Rent will be a lease in terms of IFRS 16. Very important, if, and this is what you need to do in terms of application, if there's the right to control the use of an identified asset for a period in return for consideration. Now, let's first have a look at the right to control the use of the asset. Now, when we refer to the given scenario, when we look at the first paragraph in terms of the leases, we are able to identify that UberTrack received the right to use at its discretion a fleet of 50 motor vehicles. Then they indicate to us in the second paragraph, also important to us at this point of time, that the 50 motor vehicles are identified by registration number in the contract. Unless requested to do so by UberTrack, Fleet Rent may not substitute a vehicle in the fleet for another one. Right, therefore, in our application section, when you look at the left side of your screen, I've indicated that UberTrack has the right to direct how and for what purpose the fleet of vehicles should be used. Therefore, the keyword is at its own discretion. Therefore, when UberTrack use this asset at its own discretion, UberTrack will receive the future economic benefits from the use of this asset. But the fact that UberTrack can use this based on its own discretion, we are able to conclude and state that yes, UberTrack has the right to control the asset. Now, is this an identified asset? they explicitly state in the contract, and they specify in the contract that there is 50 vehicles and they know them by means of registration numbers. Therefore, based on this, we can indicate that yes, guys, don't do that. Yes, that this is an identified asset. And we need to indicate as well here, guys, that UberTrack has the right to use these assets as and when, because fleet rent may not substitute any of these vehicles with another vehicle in the fleet if UberTrack did not request this. Okay, next, period time in return for consideration. Now, we have already discussed the consideration, guys. Now, if you have discussed this, please don't discuss this again. Just indicate to your market that you have discussed this. Okay, period of time. Now, when we look at the scenario, they've indicated to us that this is for a period of 3 years. And then they indicate to us fleet rent has a 1-year extension option that will most likely be exercised by UberTrack. Therefore, guys, based on this, we are able to identify that initially, yes, this is 3 years. But due to the fact that they will likely exercise that additional 1 year, our period will be 4 years. And in return for consideration, when you look at this paragraph, they state that monthly payments will be 205,073, including VAT. Now look at the period time return for consideration column. I have stipulated that the contract indicates for a period of 3 years plus 1 year option most likely to take this, therefore for a period of 4 years, and that the payment will be monthly, 205,073. Therefore, yes, guys, the contract stipulates the period and the consideration. And we need to remember to include our final conclusion that based on this, yes, this will be a lease in terms of IFRS 16. Right, now we need to take this one step further, and we need to look at the initial recognition. Okay, so guys, when you refer to your revision page, you will remember that in our revision page, right, you are able to identify here the whose records, lessee. Therefore, in the lessee's records, right of use of our asset and a lease liability, except, guys, if the recognition exemption is elected. Therefore, we need to discuss this recognition exemption and conclude yes or no.